Hi everyone, welcome to the weekly Wyckoff session again. So as usual we start with the Hedera and then we move on to the other 12 cryptos. Before getting into the details, if you're new to my sessions, these are the key areas I would focus on, and they're based on two main concepts. Also, this is for education, research purpose only, and also for discussion with the community here, and not financial advice, so please take note of that. So let's get started. Hedera, daily chart. At a first glance, it's got a declining volume. If we look at the bottom over here, well, the thing is, when we just look at this daily chart, we would be able to spot one thing, and then when we combine what's going on in the daily chart with the Wyckoff pattern, then there may be some hints on where the price is going. So when I draw this box, if you have been like studying candlesticks pattern, this is like a downward flag, meaning that the price, there's a chance that the price will break out of the flag on the upside, and then basically it goes, let me move this so I can get the brush. So it may be able to break out and then do a little bit of upward action, but then like for how far up it can go, it really depends on the demand, and like there's a strong resistance over here, the bottom of the short-term playground zone. And then the next obviously is the top of the box. So going back to this flag pattern, it seems to be some kind of accumulation going on, and then it dropped and then come back up again. Well, if you are familiar with the playground zone theory I have been talking about, that's something very normal to happen. So let me extend this further. So typically in the horizontal playground zone, the price just simply bounces between the two lines, the top and bottom. It's like the normal or the usual trading range that people talks about. However, trading range doesn't only go horizontally, it can go upwards or downwards, just like this. So basically the behavior is more or less the same. The price just bounces between the two upward and upper and lower boundary. That's what I want to say. So this is the upper, this is the lower. So right now we are seeing this. So this started somewhere in mid-January, and then it has been behaving this way. And what we're waiting to see now is probably a breakout from this playground zone, the downward playground zone, or the downward flag in terms of candlestick studies. If we look at the weekly chart, let me set this to just the daily interval and go to the weekly chart. So we're still somewhere around the sign of weakness. So basically last week it wasn't the actual low. This week is actually lower, so I'll move this tag over here. The thing is similar to what I said when we first started, the volume has been declining. The one in the middle that's with higher volume is basically one that there are, I would say, plenty of demand at this price point. So that's why somebody, or maybe bots order, or some big players buying at this point. That's why the price got pushed up. So from a visual perspective, this may look like breaking the downward pattern, but my interpretation is this is actually, if we only consider selling instead of like combining both selling and buying, so this downward is selling, right? And over here somebody pushes the price up, is selling, so is buying. So if we take away the buying part, the long wick underneath, that means the selling is kind of declining. So for people that are like waiting for a rebound, that may be a good news, or a bounce up. So combining the daily and this Wyckoff pattern, basically after a sign of weakness, there are two upward scenarios and one downward. I don't need to explain too much, right? So the price continued to decline for whatever reason, that's lack of demand. But for upward, there are two scenarios. One is similar to what we have seen here in 2021. This whole thing bounces all the way back to another high higher than the buying climax. So that's the up thrust itself, the UT, if you're new to Wyckoff. So that's scenario one. It bounces up all the way above the green line that I've drawn over here. And second scenario is there's no up thrust or no up thrust of the distribution. These two doesn't always have to happen. So the price would go to a second test, but it's called like a last point of supply, the LPSY over here. So that's how the second scenario will happen. So it doesn't go beyond the green line, and then it declines back, and then there may be some bounces, and then it further comes down. So these are the two upward scenarios. Combining what I said in the daily chart over here, if the price breaks outside of this downward flag or the downward playground zone, it's a natural thing in Wyckoff method that it's going to test the new demand. So imagine this, right? After a long climb, there is like loss of steam, let's put it this way, and then people are starting to like take a look and see how far it can go, especially after these downward movements. You see the blind climax and second test, right? The very long wick at the top. So after all these, it seems that the demand has topped. That's why all these downward actions follows. However, after a certain period of time, especially when there's good news in the market, like say the SEC is lifting or withdrawing their legal actions against certain crypto companies or the coins, depending on like whoever they are targeting. When the sentiments get better, there may be new demand coming in. So that's when the rebound happen. However, depending on how long that kind of sentiment would last, then obviously the price will stall and then come back down and then wait for another round of good news or bad news before the price have a next move. So that's essentially how I see this happening. So that's for Hedera, combining both the daily and weekly chart, both playground zone and the Wyckoff method. So thanks for joining. See you next in the